As we are joined on Tuesday and Thursday by Tim Ord of the Ord Oracle. We love having Tim on. Man, it has been such a wild market, so these are the times where we get to have him 2 times a week that are just really valuable. If you want to check out more about Tim Ord, you can go to ord-oracle.com. You can access his newsletter there and get his book. Additionally, you can contact him. I also want to say that, of course, you can go to our YouTube channel, Tiger Financial News Network, and you can see all of our past interviews. Really recommend checking those out. If you decide to do so, please consider liking the video. Please consider subscribing. It helps us out immensely. You can also go to TFNN.com, check out the Services tab, Secret Science of Market Tops, and the 6 secret ratios every trader should know. As I've been saying, conditions have not improved. I still believe the Secret Science of Market Tops is probably one of the best ones to get right now. Tim Ord, how are you doing?
Good. There's a lot of stuff going on right now.
Yes.
Let's just start with chart 1.
Totally.
I changed my format a little bit here. It's probably a lot easier to see what may be going on. But we displayed this chart last week, and I think last week, Thursday, probably Tuesday too. But this kind of looks at the bigger picture. The market can go down when this indicator gets below 0.7 or gets 0.75 or below, but it warns you that approaching bottom is forming. For some reason, in basically 2022, that bear market, it didn't matter, but all the other times it did. So whatever happened in 2022, why this indicator didn't work, don't know. And so you have to call that an anomaly, I guess, but all the other times it did. But what it is the 3-week average of the Association of Individual Investors Bull-Bear ratio. Anything below 0.75, we're at 0.68 right now, is usually you're going into some sort of a low.
Okay.
So we had that last Thursday, kind of a similar reading. I don't remember exactly what it was, but we're in that vicinity where most of the decline, I'll put it that way, is done. So that's kind of a bigger picture. We're going to start going to a smaller picture.
Okay.
All right. Well, actually, this is a bigger picture too. This is the bottom window is a 100-day trend going back to 2010, and the top window is NYSE. And normally, when this indicator gets down around 1, we're at 1 right now. We've been around 1 since basically January or so, late December, early January. And the market actually really hasn't moved much since December, kind of going sideways here. And I think probably what's going to happen the rest of this year, it'll probably go up a little bit, but we're not going to have a year that's going to be plus 20.
Yeah.
And we'll be lucky to make plus 10. And I'm kind of thinking between 5 and 10% probably this year. But I marked the times in red lines going back to 2010. Or actually, there's 2 blue lines in there too. But the red lines are times when this indicator reached 1.00 or lower. And a lot of times they were marked highs. And I got 2 blue lines there that the ratio or the 100-day trend did get below 1, and the market still went up. But I don't think that's going to happen this time around. In other words, 75% of the time when this gets below 1, the market is at a minimum a sideways move, if not a short-term top or not an intermediate-term top.
Okay.
So I'm thinking at best we'll do sideways, at worst we'll do decline, but I don't think decline's really in the cards. This is kind of the reason why. The next window is it's WAG breast thrust indicator, and we had a brag thrust indicator trigger back in December 1st of January, and the bottom window is the WAG breast thrust indicator, and it's advancing issues over total issues. And you take a 10-day average of that. When you get below 0.4, it initiates the indicator, and it has to go from 0.4 or lower to 0.6 or higher within 10 days. The last signal came again back in early January, went from 0.41 to 0.61 in 6 days. Okay. So a lot of times when this WAG breast thrust indicator gets triggered, the time when it got triggered, that's usually about the low it can be. So we're approaching that low right now. so that's the worst case scenario. I think you're going to, which is about 5,800 on the SPX. And this time around, I don't think we'll quite get there. But in the past, when this wag breast thrust indicator did trigger the low of that, when it did get triggered, the low of that range was a previous bottom. And if you look at 2022, you had 3 of those wag breast thrust indicators, and pretty much that was picking out the lows, especially if you got 3 in a row or 3 over a year's period. That was just a base building period for the big rally we had since the 2022 low.
Sure.
So now we're up against an area that we may have some difficulties here, but I don't see a top of any consequence. So I think you may test that 5,800, find support, rally up, rally kind of fails, comes back down. So not a big issue. So let's get down into the nitty gritty here. This indicator works pretty well. It's actually triggering it right now. It's a 10-day average. It's the middle window is the SPX tilt ratio. The bottom window is the SPX. The top window is the RSI for the SPX tilt ratio. And when the ratio gets down, or the RSI gets down around 30, you're looking at a low. When it gets up around 70, you're looking at a high. The blue lines point out the highs, previous highs in the past, if you can see it down here on the bottom.
Yep.
And pretty well. And I was looking for that high, the RSI, to get up around 70 on this last high, and it never did. So now, I did this earlier today. It's still around this range right now, but the RSI is 28. It only needs to get below is 30. So we're hitting the mark right now. Can the market move low a little bit more? Maybe, but not a whole lot. So we're pretty much starting to develop a low here.
Tim, I so hope so. Tim, please stay right there. Folks, we'll be right back after the break with Tim Ord. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. It is a Tuesday, so I am joined by Tim Ord of the Ord Oracle. Again, I strongly recommend checking out his website. That is going to be ord-oracle.com. You can check out his book and newsletter there. Tim, before we went to the break, we were looking at the SPX TLT ratio. You're seeing a potential bottoming pattern here.
Right. Yep. It's starting to bottom. It could be a day off, but pretty much it nails the bottom. If you look at the last 2 times, August, September, you know, when something goes too fast, so it's the ratio, it's the SPX tilt ratio. So if one side goes too fast against the other, the RSI rises or falls. That's what's happening right now. So this is kind of so I have several different indicators. Try to pick out the highs and lows, and sometimes they don't all line up together, but sometimes they do, and this is probably one of those times. So anyhow, you got to be bullish in here. This is going to be today, or actually could it be tomorrow or Thursday, don't know, but it depends what happens on this next this is kind of now we're getting into the nitty gritty of what's going on. This chart's pretty messy, but anyhow, this blue area I have here is times when the trend is near 1.2 and higher. If you go into that area again, normally the trend will go up because this is support area. Wherever the trend gets above 1.2, your market's going into support. And I said yesterday in my report, I said this February 3rd low probably going to be touched.
Yes.
And if you look today, we touched that low. Now, it has to touch that low on a 10% lighter volume. If we don't, we're going to go back down and test this low again today. So that's one thing. We do it. Well, volume kind of comes. This is SPY, and the volume keeps updating till a quarter after. So we actually may hit that volume, which was, I think, 66 million shares on February 3rd, which is this day right here. And we may hit it. If we do, we come back down to it. But either way, we're still making it a low. This will probably be a test of that low. I've also, if you notice, I got circles in red on this chart. And actually, we got one. Let me just circle it here. Where's my dot at? Okay, there it is. But anyhow, I'm circling this red
Nice,
here.
I see, yeah.
Yeah.
Perfect.
It's maps, yeah. Yeah, I'm not an artist. But anyhow, what I'm circling there is the times when this market reaches, trades below the upper or lower Bollinger Band.
Yes.
If you notice, when you do that, market usually backs off. The normal range of the Bollinger Band is the 20-day average. If you get too far away from it, which is basically the upper Bollinger Band or lower Bollinger Band, you'll at least come back down to the middle Bollinger Band. So this is another area of support. We're also, again, testing the February 3rd low. Volume has to be 10% lighter than 660 million, so it has to come in around 60 million or less for that to happen. And I don't have the trend in here, but the trend right now, as we're talking, is 1.88. So we do have panic, and the panic did come in.
Yes.
Let me get back to the arrow here. Yeah, okay, here's the arrow. So anyhow, we got the lower Bollinger Band here, just like previous times you hit below it. The RSI, or the trend, is supposed to get in 1.2 or higher. We're doing it. We're 1.88. Right. So we're in the area of support right now. So we got several different indicators. You got the SPX tilt ratio RSI hitting it. Mm-hmm. You got panic in the trend right now. It has to go on the close. It can't be intraday. So sometimes the trend gets high all day, then right on the close it goes neutral, and that could happen today. So this is kind of a call on the close if this will be a bottom today or not. But even if you jump the gun a little bit, probably the worst case scenario is the test of today's low. I thought at some point we may fill the gap, and I thought, get down to 582, and that still may happen, but not this go around. I think we're going to touch that gap, which we're doing right now, and try to rally up and try to take out the previous highs.
Sure. And
if that doesn't happen, then we may come back down and fill the gap. So this is a bunch of gobbledygook since December. If you look over here in December, we really hadn't gone anywhere. The market went up, we came back down. So this is pretty choppy. So you get you have to watch a lot of different type indicators to pick out the chop. But yes. Right now, if we close right now with the volume where it is and the trend where it is, I'd be long the market.
Okay.
But we're not close.
Right.
So a lot can happen in the next 15, 20 minutes.
It definitely can.
But anyhow, it looks pretty good. That's I'm kind of bullish here, and these are the reasons why. So we got a little bit of time to go over the gold market real quick.
Yes.
All right. This is keep showing this chart. You got to remember the monthly charts rule the daily charts rule the weekly charts, and all the way down. So long as the monthly charts remain on a buy signal, which it is, the bottom window is the monthly GDX up-down volume. Next window higher is GDX advanced decline cumulative. As long as those two indicators stay above the mid-Bollinger Band, which they are right now, the uptrend's intact. So It's bullish. This is what's going on a short-term basis here. This is what I thought we'd go into consolidation. We talked about last week, I think, and we're probably heading, GDX is heading for some sort of a pullback here. The reason why this window here is an inflation-deflation ratio, and when the RSI gets up around 70, which it did last week, normally there's a pullback in the market, and that's exactly what happened. But I don't think anything real serious to the downside is indicated. I think normally you go back to the previous highs, and on GDX, previous highs around 39. Mm-hmm. On the XAU is, 55 area, 155 area, somewhere in there. We're pretty close to that. So I think, probably going to find support near this level. So what happens from there? Up. Actually, this is a bottom indicator, which is a 50-day average of the up-down volume advanced decline indicators for GDX. And once you hit below minus 20, the minimum rally goes to minus 10 at a minimum.
I see.
We're at plus 1.61 right now. So we got further to go. Now, this is a slow-moving indicator. It doesn't try to pick out all the wiggles in the market. it just stays, this uptrend back in, early 2024, the market rallied up. It kind of chopped all the way up to that, 43 area. Well, this indicator stayed bullish. It did try to pick out all those back and forths. So that's what kind of this indicator is, kind of smooths out the uptrend. Even though you get some chop in it, as long as it stays above zero, the uptrend's intact. And that's probably what's going to happen here. Even though I think we may back and fill here a little bit longer, this indicator, which is the up-down volume, will stay bullish. So I think it'll stay bullish all the way into July. So what that says is the market is going through rotations. Stock, we're rallying or starting to fail, and the ones that have failed are starting to rally again.
Fantastic. And I will say, too, I'm starting to see a major sentiment shift in favor of gold miners, actually, which is pretty fascinating. Tim, thank you so much for joining me. We'll see you Thursday.
All right. Talk to you then. Thanks a lot.
Take care, Tim. Folks, stay right there. We'll be right back for a short segment right after this break.